All right. I hope you guys are having the best day of your entire lives, yo. So today I made about $6,000. I actually tried. I was up, I was up 5,700, and I tried to get above 6,000. I'm like, oh, 6,000 would be a cool number. And I was up about over 6,000 by the time when I closed my position. I lost like a little bit of money, and sorry, I wanted to try again. I was like, let me try one more time, but I just knew straight away. I'm like, now I'm trying to trade the profits. I'm not even trying to look for the plays. I'm like just trying to trade the profits because I want to make the extra $18. So that probably is a number one lesson for everybody. Never ever try to trade profits. It doesn't end up well, right? So talk about six trades, 6 or 7 trades. And there were a few trades which I think there's a lot of sauce here. There are a few trades where they could have been avoided. Maybe, some mistakes were made. We'll go over them and see what we try to find. All right, let's get it. Now, the first trade that we took was on Amazon. There's a first trade on the day, and like I want to before I even talk about Amazon trade, I want to talk about the trade that I missed. All right, because there's no accounting for the missed trades, but I missed the trade on Microsoft, and I was like, it kind of got me for like 3 seconds or 5 seconds. It got me to like my brain, and then I went, you know what, man, it is what it is. At the end of the day, it is what it is. There's still only 10 minutes into the market open, and there is about 6 hours and 20 minutes left for me to take the trades and make the money. So I picked up myself. I'm like, you know what, it's all right. So let's talk about this trade that I missed. All right. So Amazon, this Microsoft was Microsoft opened, and in the pre-market, just like looking at the pre-market, what do you see? After yesterday, super weak price action towards the last hour, we started chopping around. Pre-market started chopping around, and when I was looking at this, and I'm just like thinking to myself, I'm like, okay, we are holding above this 200 moving average on a 2 minute chart. Right now, if we break below, it was like kind of first 2, 4, 5 minutes we were holding roughly here. I'm like, if it breaks below, trend might be picking up a trend. And what's a definition of a trend? What's a strong definition of a trend where you're like, yeah, definitely, I know this is what trend is. Trend is when we can form higher highs and higher lows, higher highs, higher lows. That's how the trend works. But towards the downside, it works the opposite, right? So where we have um lower highs, lower highs, lower highs, and lower lows. And this, this, this point, this point, this point. What does it look like? It looks like the downtrend has already started in the pre-market. Let's see how far it wants to go. And if it gives me a little pullback, and always there's three type of different structures which I want to break down here, all right? You should take notes, all right? You should take notes. You should write this down. More repetition, it will stick to your brain, all right? There's three type of market structures. The first market structure is always going to be um, one pullback, one push. It's called impulse, all right? First is impulse. Second is a pullback, and third one is impulse back in the direction. All right. This is how the market works, right? On a bigger, so sometimes when there's a lot of chop in the market, it's just like on a, but it's still impulse pullback and impulse happening, but it's happening on a bigger time frame, right? That's why intraday time frame is getting a little bit choppy, but that's cool. This is one, right, where impulse pullback impulse, and that's why we have market moves like this. Towards the downside the same way, impulse pullback impulse. And the second one is where we have impulse, pullback, tries to do impulse, but failed impulse, but we do not make the new highs. Pullbacks again, tries to do another one, fails, pullbacks again. So this tells us that there's a lot of sellers sitting at the top right here. So many sellers sitting at the top that they're not letting the buyers let the price take over, right? And what happens? There's two ways how this can go. And there's buyers at the bottom which are pushing the price. Now there's a tug of war going on between two people. They're like, oh, I want to win. They're like, I want to win. But pretty much right now, it's calm, right? It's sitting at the same price point almost. So now there's two ways. One is nobody knows what's gonna happen. You don't know, I don't know. But all we can do is based on this, the structure is we can, if it goes towards the upside, breaks out of the range, we can trade upside. If it breaks the downside range, we can trade the downside. That's the second structure type. Does it make sense? Then the third structure type comes, which is, and this is where the FOMO kicks in with a lot of people, and that's this. How do you trade this? How can you even trade that? And this is where the most amount of FOMO kicks in, where it's like, oh my God, look at that, that's moving. And I'm like, yeah, it's just pushing. That means it's incomplete. This one's incomplete. That's why there's FOMO right now. Right? When it's incomplete, what do I mean? Remember the first one? It's impulse, pull back, and then impulse again. So right now, what you're seeing is just this bit. There is going to be a pullback, but you're just saying that pullback is yet to happen, right? So that's what's pretty much what's going on in this. And a lot of people lose a lot of money here. Why? This is what people do, yo. I used to be I used to be one of those people too. Impulse happening, and I'll be like, oh my God, I don't want to miss this. This FOMO, this bad FOMO, bad fear of missing out. And I'll buy here. I'll buy call here, yo. And then you know what happens? Pulled back. Like the structure. They pulled back. And then around this point, the pain of being in calls is getting to a point where I'm like, man, fuck, what the heck? I'm gonna get out. And I'll get out here. So I'll sell I'll jump out of my position. You know where I sell? Where I sold? This is what happens. And it pushes. And I'm just like, oh my God, I sold at the wrong time. I'll buy again. And what happens? Pull back again and I sell again. Over and over again. So you go, my goodness, bro, what the heck is going on? And that's when I really started learning about, like, okay, what I'm doing is what 95% of traders do. And that's why 95% of the traders lose money. So what do I need to do is whatever I'm doing, I wrote everything down and I'm like, okay, I'm going to do exactly opposite of what I was doing. This is me back in the day. And I actually started making money. So I wrote down what I do. I'm like, okay, I'll wait for the pre-market high to break. As soon as the pre-market high break, I'll buy. I'm like, all right, I'm going to do the opposite. Yeah, of course, there were some losses. I was like, the system wasn't refined, but took me a long time to learn all these lessons. All right. So the structure is clear here. And let's go back to this trade. What is happening right now? What do you see? An impulse, right? Clear impulse. What do we need to wait for? A pullback. Let's see what happens. Still an impulse. And then we started seeing a little pullback. Look at this here. So I pull back. What is coming next? Simple. Super simple answer. If the downtrend is strong, the next impulse can be here. Profit target can be the next level that we have on our charts. Right? This was a trade that I was watching originally, and I don't know, man. Somehow I missed it. I think what happened was I looked away for a minute. I looked at my other screen for a minute. So Microsoft's on this side. Usually I do not have Microsoft on the screen. So I looked at this and I was like, okay. By the time I went back, Microsoft had already left. So didn't chase, which was a good thing. But this is how he went. He literally just dumped. Um, Around this point where I was like, oh my God, I'm getting a little FOMO. But having emotions on a trade is cool, right? Everybody got emotions, man. Like when there's money involved, there's emotions. All right. So you can't get rid of emotions, but you can control the emotions. But in order to control the emotions, what do you need to do? The first point is you need to be aware of them. So you need to you need to call them out loud. And that's what pretty much I did. I wrote it down straight away on a piece of paper. I'm like, Microsoft. And I wrote down angry. Is that Microsoft hyphen angry? Because I was getting frustrated. And that made me realize my emotions at the time. And I didn't do any dumb shit. Otherwise, I would have lost some money if doing some dumb crap. And that's where I realized, you know what? It's only 10 minutes to the market open. I got 6 hours and 20 minutes left to take one beautiful trade, and I'll call it a day. But then we started picking up really good trades. So, all right. Next comes, I really wanted to break down the missed trades because missed trades is one of those trades where you cannot blame anybody else. Think about it. When you take a losing trade, let's say you took a losing trade and you're in the chat with me and you took a losing trade, you know what it is? It's so much easier to just say, oh man, I took the trade with Samesh and it didn't work. You can throw a blame at somebody else. Or my broker didn't work. Or my fill price was bad because of my broker. When you miss a trade, you know what happens? You can't blame anybody. And that's why when you miss a trade, it hurts really bad because it's just you, nobody else. Right. So that's why I wanted to break down the missed trades. Well, I think you can learn a lot from the missed trades. So you should always journal your missed trades as well. Right? If you do not journal your missed trades, just journal. Write down, why did I miss this trade? Was I distracted? What could have been done better? Right? These are three questions that I ask myself. And please write this down. I'm giving you the sauce right now. You guys are chilling too much. Write this down if you can. All right. Now let's go over the Amazon trade. This trade was beautiful. Same thing, the structures, what we did, and then the market started coming down a little bit. Market's coming down, and the time frames. You all know the time frames that I use to trade is as soon as the market opens, there's different time frames for different times of the day. 9:30 to 10. I'm only watching 2 minute. I'm kind of paying attention to a little bit of 5 minute, like 200 moving average on a 5 minute, where the 200 moving average on a 5 minute chart is. That's the only thing that I'm paying attention to on a base, even if I'm trading on a 2 minute chart. But otherwise, from 9:30 to 10, I only watch 2 minute chart. From 10 to 11, I only watch 5 minute chart. All right, that's the only time, and I only watch 5 minute, nothing else. And then 11 to onwards, it's like 10 minute chart. All right, it just works. System works. The only reason is there's not enough candles early in the day for 5 minute charts to work. So 2 minute chart works well. And then from 10 to 11, there's too many 2 minute candles, and you'll get confused. So 5 minute works beautiful. And after 11, there's too many 5 minute candles. You'll get confused. So 10 minute chart works beautiful. All right. That's different time frames. Now this trade was taken before 10 a.m. So let's go over the Amazon trade. Amazon clearly in a downtrend. We started picking up towards the downside. And as I said, downtrend work, the structure of the downtrend is like this. And the downtrend was going on. But I like to wait for the pullback for me to enter into a trade. And now we started seeing a little pullback around this area. This is the actual pullback that we saw. Now, what I did was I actually just went out there and I grabbed my Fibonacci tool. I went from top to bottom. Look at this. Went from top of high of the day to low of the day right now, where I started seeing the pullback. And these are my favorite numbers that I absolutely love about Fibonacci's. 0.236, 0.382. Favorite numbers. If the trend is strong, it should get rejected of this 0.236. The strongest of all trends will get rejected from 0.236. The strong trend will get rejected of 0.382. And then everything else pretty much is 0.5, 0.6. Some people go about, oh, 0.61 is beautiful ratio. Nah, 0.5 is beautiful. So, nah, people say a lot of shit, all right? But still 95% traders lose money. So don't listen to people. All right. 0.236 is absolutely my favorite. If it's getting rejected of 0.236 and I see that it's getting rejected of 0.236, my position size is always higher than average. All right. My position size is up. When it's getting rejected of 0.382, my position size is like a little less than average. So this is little position sizing lesson for you. Because the trend is strong, that's why it's getting rejected of 0.236 level. And when it's getting rejected off that level, that's when I do a little more than average position size. Now, for me, average might be like 5,000 position size. For you, average might be 500 position size. That's not the point. The point here is if it's strong, you want to bet more money in it, right? You want to bet more money where the chances of you winning is big, right? If you're betting on horses, which horse would you bet more money on? The horse that's fucking 20 years old or the horse that's like full fresh, like has some legs to run? Has some legs to run. So it's exactly that. All right. And these are my settings, by the way, guys. If you want to take a screenshot, my Fibonacci retracement settings, take a screenshot. And there's nothing much to change. I just don't like the colors that they provide. I just changed the colors to gray, red, pink, so I never miss them, never ignore them. Um, this is it, right? And all right, let's get to it now. Where I entered. So I entered the moment the lows of, because this candle was not a bearish candle. Like a bearish candle would have been something like with a wick on top. Why? Because at one stage, let's say if this is a green candle, this was a green candle all the way. That means sellers were like, "Uh-oh, where are you going? Get your ass down." And the price started coming down, right? But this candle was like a full green candle. That means the buyers were strong. I didn't want to just go and play, short right here the moment it got rejected. There were chances that maybe it might go and reject here. I don't know, but I don't want to just risk it. So what I did was I waited for fully to jump into a trade right here. I was like, all right, sweet, I'll add in, I'll get in here, and there was a trade, and this trade actually went to 100% trade. So this is how it went. All right, ready for it? This is how it went. Slow and picked up. So as soon as the 10 o'clock hits, this is about 10 o'clock about to hit, you go on a 5 minute chart. I switch the chart straight away. But if you think about it, what was my risk? My risk on this trade was Fibonacci point to this. My risk was like what, 179. I'm risking about 77 cents, 75 cents to potentially make over $1. That's decent. Like I'm risking $1 to make $1.50. But then you let your runners run. And this is what people do, all right? This is one mistake that a lot of you all make, and you need to stop it. The biggest mistake a lot of traders that I see making is they jump into a trade here, they say this is a stop loss, but when the price starts coming down, they jump out. They're like, oh my God, I'm happy with my 5% win. What basically happened is where you jumped out, let's say you jumped out here, right? Because the price started going in your direction because you were scared that you don't want to give back the money. Now think about it. You just risked about 75 cents to potentially just make about 35 cents. If you do it over and over again, what's going to happen? You're going to blow up, right? That makes sense? It's just about you doing it over and over again. Just try to make sense of it. Man, my original risk was 75 cents. I cannot, like, I at least need about 75 cents. So don't micromanage it. Just be like, all right, I'm not micromanaging it. Sweet. And this was the trade I took, and it went down, man. It went down big time. Like, look at this. It went down all the way. I was like, Amazon to zero. I was like, Amazon to zero. Let's go. But it went down all the way. Sweet. We kept taking profits as it goes down. We kept taking profits. And then this trade became risk 75 cents. The original risk was 75 cents. And the reward's like $2.50 at this point. That means every $1 that I risked on this trade, it turned into $3.4. That means if you risked $100 on this trade, you would have made 340 on average, right? That's the game you're playing. So every time you risk less, you need to make more, right? Name of the game. Now, how do we manage the runners? Another problem that you might have is called not knowing how to let your runners run or micromanaging too much. A little move against you, and you start joking. You're like, oh my God, don't want to give back my profits. All right. And that it can only be fixed when you do negative risk management. And I've spoken about negative risk management a lot of times, but it's one of those things that I will keep on going over and over again because more more repetitions, more your brain thinks that it's a big deal. More your brain thinks it's a big deal, more you'll start actually thinking about it all the time. And hence you start following it eventually. So what's negative risk management? All right. Negative risk management. I would say even more, I think this is more important. Negative risk management is more important than just normal risk management. I personally believe negative risk management is maybe most important thing ever in the trading. Like if you do not have a strategy when to jump in, when to jump out, but you have negative risk management in your trading, you'll make money. Like, I mean it. All right. So, and this is super easy to understand. Let's say you jumped in. This is why I think no, like you should never ever do just one contract. Please, never ever do one contract. If you can't afford two contracts, don't trade. If you're like, bro, but I can't afford meta contracts. Right? Meta contracts are like fucking $5 each. I can't afford two of them. Don't trade meta then. Huh? Super simple, isn't it? So always you need to do more than one. You can do 2, 5, 10, 20, 100. I don't care. But don't do one because it's you can't manage the trade. Negative risk management mean, let's say you jumped in 10 puts on at this level. It was about to break, jumped in. This is your profit target. All right. And this is the second next levels that you have. You jumped in 10 contracts at $1 each, right? Price started moving down. By the time it hits your profit target, they are sitting at 1.5. Right? That means you made $50 on a contract. So the moment it hits your first profit target, you need to sell half your position size. This is really a science. This is not even an art. This is something that you need to follow exact what I'm saying. You'll make money. All right. So you sell half the moment it hits your profit target. That means $50 a contract, because that was a profit, $50 a contract times 5. What are we looking at? That's $250 in your pocket. You booked already. Now, this money is in your pocket. This money should not come out of your pocket whatsoever, right? Now, let's say when you at work, right? You just got paid. Do you like when somebody just comes up to you and he's like, "Hey, give me your money." You're like, "Oh, I just got paid." Like, no, give me your money. Absolutely, you'll hate it. You'll try to fight. You'll hate it. That's what we do in trading. We just go, all right, this is the money in my pocket. Here, please take it. Why? Once the money's in your pocket, it shouldn't leave. All right. So 250 is in your pocket. You still have 5 contracts left. And they up 250 as well because everything's sitting at 1.5. The stop loss for these 5 contracts that you have, all you need to be worried about is the stop loss because you don't want to give back anything that's already in your pocket. Now you go, okay, the stop loss is break even. That means stop loss is $1. Now, even though this trade, let's say trade goes against you big time, if this trade goes against you big time, you'd still have this in your pocket. Why? Because the stop loss is break even on the option contract. But what if this trade goes down to the next level? If it goes down to the next level, you take about, again, try to do 50% again. But now you have 5 contracts. How do you do 50% again? You can't take 2.5 contracts off. It has to be either 3 or 2. I personally like to take off. If I have a choice between, I always go a little bit more. All right. I'll take off 3. By the time this comes right here, if these contracts are sitting at 1.8, that means $80 a contract now. 3 times 80. What is it? 240. You still have 2 contracts left. Right? Now you have booked about, what's this? 490? 490 bucks already booked, and you still have 2 contracts. See what I'm saying? If it bounces, stop loss is still break even. If it goes down, that's when you take another 50% off. Comes to a point where you're like, I can't take any more 50% off because I only have 1 contract. That's when you take all off and you call it a day. Does that make sense? Let the stock market be the sorting device for you rather than you trying to sort it out. You already took profits originally. This is just like, if it worked out, you'll make a lot of money. And that's what negative risk management is. Once the money's in your pocket, you shouldn't leave. You're trying to protect that money. All right. And one of the biggest trading days that I've ever had came from negative risk management. I think if I would not have learned this concept, I don't even think I would be sitting here. I would be taking everything off at one point and I'll call it a day. It would have given me confidence to put more money into the trades that were working or anything. It's just one of those things. So every yellow line that you see after my first profit target, every yellow line that you see, I start taking more and more off over those at those levels. This is what I do, negative risk management. And then the next candle went even down, but every candle I take more and more off. All right, every yellow line I take more and more off. Then it started reversing. This is how I went. This is where you're like, I'm waiting for my break even. And you know where my break even actually got triggered? My break even got triggered roughly around here actually. This is where my break even got triggered, like so high. And that's where I was like, sweet. I only had like 3 contracts at this point. I'm like, sweet. Easy. All right. And that's how this was originally, this trade was like 100% trade. So beautiful trade. All right. Next comes, it was Apple, no, Meta. Meta. If you looking while I'm looking at the down here, I have a broker open. All right. Meta is, again, trade was taken on a 2-minute chart right before 10 o'clock hit. And this trade was also a 100% trade. Absolutely insane day, man. I should have been up more. I should have been up more. I just kept my position size small because yesterday I made about, 15 grand, 14 grand. I kept my position size small. I was like, yeah, nah, I need to chill. All right, let's see what we have here. This is Meta. Meta started and Meta broke below yesterday's low. This is yesterday's low right here. Meta broke below yesterday's low, and then Meta started, tried for initial minute or so, try to break below the pre-market low. And this is one thing that I just want everybody to understand here. For me, the A plus setups, a trade becomes a plus setup when it can break below pre-market low and yesterday's low at the same time, or not at the same time. Like if it's below yesterday's low, if it's below pre-market low, and that means it has some legs to run. Why? Because there's no on a daily chart it will look sexy. So if you go on a daily chart, look at this. Now, right now you see this wick, but on a daily chart, it would be breaking yesterday's low, pre-market low. That means there's some free fall. There's nothing that can stop the price from, like it will make a big move. Pretty much what I'm trying to say. All right, and so this is important, right? And let's go over the meta trade. I waited for pre-market low to fail, and this is where the pre-market low broke. And then what did our structure says? Structure says wait for a pullback. This is an impulse move. You need to wait for a pullback, right? Now, where is the pullback going to be? We don't know. Like nobody knows. You don't know. I don't know. But we wait for the pullback. And then I'm like sitting there. I'm like, oh man, I'm getting, I ain't gonna lie. At this point, I was like, oh my God, I'm getting FOMO because I made a Instagram video on this as well. And I was like, man, I want to catch this move. I want to catch this move. I made an Instagram video this is what I'm looking for. Uh, but this is going without me and I have not entered yet. And I'm like, oh my God, I need to jump in somehow. But again, same thing, calm down. Oh my God, this was bad. And then I saw a little pullback. You see it? I saw a little pullback, a little lovely pullback right at the critical level of 452.5. I saw this pullback. I'm like, sweet. Now, if the lows of this pullback or if 452.5 breaks towards the downside, 450 can be next. And 450, what is 450 level? It's a dynamite level. It's a huge number. If 450 breaks, a lot of people who are going long, the people who'd like to trade equities, man, their stop losses are here. They like to put their stop losses right below the 450 level because they don't like to take too much risk. They're like, oh, I have 10,000 shares. I'm risking 10 cents a share. I'm happy. But when these people's stop losses are getting triggered, guess what? All these 10,000 shares are coming into the market as a sell order. This was the original plan. I'm like, if it gets below 450, originally I wanted to take some off at 450, to be honest. I'm like, I'll take some off at 450, no problem. And if 450 breaks, I just knew we are going to make a big move down. And that's exactly what happened. So this was what I was watching. I'm like, sweet, if it breaks below this level, I'll jump in. And it did break below. Now on this candle, yeah, you might be like, but bro, didn't it hit your stop loss? No. As soon as this candle opened, it went up. And then all the sellers were like, where the heck are you going? Don't you see that we have a control over the whole trend since morning? Buyers, like, think about it. They might be having a conversation. Buyers are like, yeah, no. So, all right, please move away. All right, sweet. If you were a buyer, would you buy when the stock has been coming down like this? If you had a choice, would you buy? No. You'd be like, all right, you know what? I have a choice, either buy here or maybe buy a 450. 450 sounds like a decent number. You know what? I'll buy a 450. Let me just sit back a little bit, enjoy. And that's what pretty much happened. Buyers tried to buy. And the sellers are like, don't you see what we're doing here? They're like, all right, you know what? I'll move aside. And the price went down. And the moment it broke below was when we entered, right? And this is how it went. It broke, right? I started playing around a little bit. Yes, our stop loss is my stop loss is above this 453, this particular candle. Right. So this is my stop loss that I'm watching right here above this candle. And let's see what happens. Boom. And 450. The moment 450 breaks, the game was just like, it was over. It was done. Beautiful. All right. We were up. Nice. It's just the psychology, yo. Try to understand the psychology behind the move. Right? Buyers wanted to take over. Sellers are like, nope. Gave us a nice candle. It gave us a nice move. Nice little flag right here. The moment that broke 450, I took some profits. Then again, what am I doing here? I'm doing the negative risk management thing all over again. Right? The negative risk management took half off. And I'm like, sweet, I'll just chill. Based on my hourly levels, based on the past hourly levels, next level can be 444. Now that's a big move. I'm like, oh, that's a big move. That's a wild move. But if it goes, it might be nice, right? This is what we're watching. And now it's 10 o'clock. Time to jump on a 5-minute chart. And this is what happened on a 5-minute chart, yo. And boom. What did I do? Took more off. Why? It's my hourly level. This making sense? The moment it touched my hourly level, it took more off. And what am I doing with the remainder of the contract? Stop loss, break even. And my break even hit when it started bouncing like this. Look at this bounce. That's when my break even hit and I jumped out. There's no point in trying to, hold on to a trade just because you're like, oh, please go down one more time. I didn't take profits enough. No, you follow a system, yo. Hope's not a position. All right. So you need to follow a system. That was Meta. Beautiful trade. Now I'll just speed it up a little bit, and I can talk about charts for like whole day, man. This is me. I can talk about charts for 24 hours a day, no problem. Um, Apple trade was a loser, so that's why I want to break it down. This trade I lost money on, and this trade was just after 10 o'clock. All right, I entered this trade. Why? Because it's below yesterday's low. Look at this. It's below yesterday's low. What did I just say? Yesterday low, pre-market low. If they both break, I like them. It was below yesterday's low. It was below pre-market low. And I wanted to wait for a pullback, and I got a pullback right here. This is the candle that I was watching. And I want to get a pullback. Pullback happened. I'm like, sweet. It's forming a little flag tap thingy right at the bottom. I'm like, all right, if it breaks below this, I'll jump in. Stop loss be on the other side of this pullback. Right? And this is what happened. It went below. I'm like, sweet, this looks good. And it played around. Oh my God. It felt like this half an hour, it felt long time. In trade, half an hour feels a long time. All right. And the stop loss got triggered. I lost about 40% on this. Now, would I do anything different? No. If the trade next time this trade is setting up, would I take it? Yes. This was the exact trade pretty much what I was setting up on Meta and also on Meta. Why below yesterday's low, below pre-market low, there was exact trade. Now, why do I get to pick and choose which trade I'm gonna take or not? I took this trade, didn't work, too bad. No problem. That makes sense? So it just goes to show that you don't know which trade gonna work. Would I take this trade? Yes. And there's no point worrying about it. Right. Then I took Tesla trade, and that trade didn't work as well. Another trade that didn't work. Same thing. Would I take it again? Yes. So no point worrying about it. This was a trade taken roughly around this level. I got a pullback after this big move. I think this trade was forced trade. This is one trade that I don't like. This is the out of whole trades that I took, every single trade that I took, this was the one trade which I absolutely hated. When I was doing my journaling just then, and I wrote down, I'm like, in reality, I like to wait for a trend. I like to wait for a trend. I like to wait for a nice, sexy trend towards the upside. In reality, this was like ugly early in the morning. That means it's about nature of the stock. Every single stock, every morning, it sets up its nature every day. Like every single person has a nature. You have a nature. I have a nature. Every single person has a nature. Every single day, stock market sets up its own nature. And this day, clearly, market set up a nature of being deceitful. It's been deceiving. It's not even going on a solid downtrend when everything is going on a solid downtrend. And it's just, playing around, being choppy, and it's being deceitful for the day. And I should have just known. But I went long the moment I saw this pullback happen and a break of this critical level that I had to 24 with a stop loss right on the bottom. And then eventually my stop loss got triggered, but I stayed in this trade for a long, long time. And I didn't lose much, maybe 20, 25%. Didn't lose much, but this was a trade. I could have avoided this because when I was looking at it, I'm like, man, would have take, like, if I was not up heavy on the day at this point, would I have taken this trade as a first trade of the day? If this was the first trade of the day setting up, was it looking like a A plus setup? Was it looking like a A plus setup? No, I would have not taken it. So why did I take it when I'm already up a little bit? Just because, no, I'm already up a little bit. Who cares? Let me just put some money in. Nope, that's not the way. So this could have been avoided. And then last trade was SPX. I took it on Spice chart. I was watching Spice chart, but I was trading SPX chart. 10-minute chart. Absolutely beautiful trade. So I saw this big move, the V-shaped recovery that happened. Based on it, like, you know, it's after 10 o'clock. So I was watching after 11 o'clock. So I was watching 10-minute chart. Um, and I saw this is really, really beautiful, yo. I think I made 70% returns in a matter of like 10, 15 minutes. So quick, boom, boom, done. I was watching this and I'm like, okay, this looks so good. It went down, it made a V-shaped recovery. This is nice. Let me see if I can get a pullback. This is pre-market high. I'm like, let me see if I can get a pullback. Right? I'm waiting for a pullback. I got a pullback. I'm like, all right, I got a pullback. What am I doing? I am buying the moment it breaks above this pullback candle. Stop loss on the other side. This was my trade. Like literally. Super simple. I'm like, all right, I'm gonna go long here. My stop loss is right at the bottom. Profit targets next yellow line that I have. I'm risking about 70 cents to potentially make $1.20. This looks good. And I did SPX contracts, but I was watching SPY, but I was trading SPX contracts. Um, and I jumped in. The moment it broke, just made one massive fucking candle towards the upside. And I've been said in the chat, yeah, I've been said in the chat where I was like, I'm jumping out, and it's like wizard stuff. You see what I'm saying? I said I'm jumping out, and the moment I was like, I'm jumping out, um, took a tiny bit off. We printed on this. Yeah, sorry, pardon my French, but we printed on this. Um, and you know where we took profits? Right at the top at that given time. Then it started pulling back, took profits, was out. Took profits here, took profits here as it was going up because I was up decent. And same time I was doing, actually, I was in QQQs as well. It was just, too good to ignore pretty much. QQQs had an open price sitting right at the top. The open price is an indicator as well. Just like the first print of the day, I'll break it down some other day. Um, the moment that breaks, the next target was this 465 stop loss right here, next hourly level. Like, sweet, it hit the hourly level, jumped out, had remainder of the contracts left at break even on both SPX and this. It got triggered and I jumped out. It's a beautiful trade. Now, these were my trades. Now I might actually post this video on YouTube as well. So if you're watching this on YouTube, you know what to do. Like, subscribe, comment, whatever you want to do. All right. Maybe subscribe. Subscribe more. I want to get to 10K subscribers by the end of next month. So help the brother out. So I can help you out more. All right. That's it. That's it, YouTube.